Hello and welcome to Core Finance with me, Matt Brown. And I'm joined today by Bob Smith, who is the Executive Vice President of Mytrah Energy. Good day to you, Bob. Are you well?
Hi, nice to see you.
Thank you very much for coming in. So let's start off. Mytrah Energy, who are you and what do you do?
So Mytrah is an India-focused renewable energy company. So we own and operate and build wind and solar plants in India, and we sell the electricity on long-term stable cash flows to government entities. So essentially we're a utility, but we're a utility which is growing very rapidly. And over the last few years we've generated a consistent growth trajectory of 30 to 40% a year, and we expect that to continue into the future.
And you mentioned you're obviously growing as a utility company. Would you place yourself as a startup company, or where along the life cycle would you put your company?
Yeah, we started in 2010, so we're 7 years old. And when we started, we had a very small team and we had very little in terms of assets. And we raised $75 million of equity on the UK market, so we're listed here in London. And from that, we've now deployed about $1.2 billion of capital in total over that 7-year period. So we have an operating capacity in India of just over 1,000 megawatts of wind and solar plants. And we would say that we've reached a point where we're now a mature business which is generating a lot of cash and has demonstrated its ability to grow in the Indian market and deliver tremendous business results.
So you actually have turbines and solar panels already operating in India. This isn't a shell or startup business. You are on the ground actually generating energy at this
Yes, we are. In fact, we've got 635 wind turbines today spread across 8 states in India in multiple projects, and thousands of solar panels obviously also deployed into solar plants.
And it can be, I assume, quite a capital intensive business to build these turbines, but you've already mentioned you've managed to raise that capital. And how has Mytrah raised that capital over the 7 years?
Well, as I said, we started with a small equity investment, $75 million, and we've leveraged that up in lots of different ways. So we started by raising some mezzanine finance, and then we put senior debt on top of that in each individual asset. So the structure of the company is there's a holding company in India, which is owned by the LISCO, and then underneath that there are special purpose vehicles, and those special purpose vehicles own the assets. So each one of those SPVs, it contains the senior debt for that asset, and the senior debt is secured only on that asset. So there's no, although the debt looks quite large, actually there's no feed through from the asset to the topco. And this is fairly typical infrastructure financing structure.
And you had an announcement this week. Can you just talk us through in detail that particular announcement?
Sure, there's 2 pieces of that which are very exciting. So the first one, of course, is just reinforcing the growth trajectory I was talking about. So in the first half of the year, we expect revenues to be up around 60% relative to last year. So significant growth from that point of view. But then the other part is that this is the first time that we've actually been able to announce operating solar projects. So we've been working on our solar business for a while. We started with wind because wind, from a cost effectiveness point of view, wind was more attractive to the Indian market. But what we've seen is solar prices have come down, and that now is also attractive. So we moved into solar a year or so ago, and now we've started to operate our first solar projects. So this is a big step forward for us in terms of diversification of the cash flow, and also further demonstration of our ability to deliver the business.
And green energy, are you operating in the green energy space from a moral point of view, or is there money to be made there? And certainly in India, where costs and they're very price sensitive, is it a moral stand, or is there money in wind and solar?
So I think the very interesting thing about the Indian market, which is different than what you see perhaps in some other markets, is that India is fundamentally short of power, and the wind and solar product is able to deliver that power at the same cost or even cheaper than the alternative. So when you produce additional wind and solar capacity in India, you're not replacing existing incumbent power, you're adding new power. And you're adding that new power at a price that people are willing to pay, because it's at least the same as, if not lower than, the alternative, which in India generally tends to be coal. So we're producing a product that people want at a price they're willing to pay, and in addition to that, we're able to do it much more quickly than a coal plant. Coal plants take 5 to 7 years to really develop from scratch, whereas wind and solar, you can do that much more quickly than that.
Fantastic. And something in the news of late, obviously, is Donald Trump and the Paris Accord and walking away from that. Do you think that is a threat potentially to the Paris Accord, and how countries like India will view green energy and solar and wind going forward, or will you just carry on and provide at the price that people want?
Yeah, I mean, I think, again, India is very exciting because of the fact that although there is talk of renewable energy and there is talk of the Paris Accord, and India has a sort of a responsibility globally to green its energy mix, it's not doing that at a price which is unsustainable. So as I said earlier, wind and solar is actually providing that green energy at a price which is competitive with the alternative. So that means there's no government subsidy, there's no government support structures required to allow that business to continue. So whatever the rhetoric is outside of India, the point is that people will continue to buy wind and solar in India because it's a cost competitive source of power and it comes much more quickly than the alternative.
And you mentioned the EBITDA. Can you just talk us through the recent EBITDA and where you're at with regards to, looking at numbers basically for the bottom line?
Yeah, sure. So again, as I said at the beginning, we've gone from being very much a startup to deploying a lot of capital over a relatively short period of time. And the proof of the pudding is in the cash flow that you generate from that. So at the end of 2016, our results, we reported $128 million of EBITDA, which is a very substantial amount of money coming out of the business, and I think is a really good proof point to show that this is not a startup anymore. This is actually a very strong cash generative business.
And you talked about the senior level debt and mezzanine debt. Is there a large cost to finance that debt from early investment?
So there's a bit of mezzanine that's still in the topco, which is quite expensive because, as you said, it came in early, and we'll refinance that out probably later this year. But the majority of the debt, the senior debt, actually the price of that's coming down for two reasons. One, because India, as a country, the base rate is falling. So if you look at the base rate trajectory in India, it's coming down. But the other piece is that the senior debt itself is getting cheaper because the asset class is gradually being de-risked. So the providers are getting more comfortable and therefore they're reducing the margin. So in general, the trajectory for senior debt prices is downwards, and we've been able to take advantage of that to improve our margins.
So you're looking to basically reduce that debt and be quite proactive on.
Yes, and we'll continue to do that as the situation evolves.
Fantastic. And looking at the shareholder register, you've got some big institutional names on there. Can you just talk us through the free float and the current holders of your stock?
Yeah, so the founders still own a big chunk of the stock, so 58% is owned by the founders. But 15% is owned by two big institutions, Capital and Henderson, who came in right at the very beginning, and they've stuck with us over the last few years and been very enthusiastic about the business delivery that they've been able to support. So apart from those pieces, there's a big chunk of free float, obviously sort of 20% or so, which is generally held by sort of mid-market funds and private client brokers.
And that leads me on to the share price. We're currently trading around 30p. A recent note from Investec, a well-established broker and research house, have put a price target of £1 on the stock. So there's quite a big difference there. What are investors missing? If the share price is 30p, Investec are calling it £1, there's a 70p difference. What has the market potentially got wrong here?
So I think that, I mean, it's difficult to speculate about what really is driving it, but the thing that's clear to me is if I look at the business delivery and the share price, the two things are completely disconnected. And so one part of it, I think, is just being clear about what the business delivery truly is. And of course, that comes through in the numbers, and there's always a bit of a lag between when you say you're going to do something and then the numbers coming out to prove that point. So I think we've probably seen a little bit of that people are just waiting to see the proof. And I think last year the end result was a very good one, and I expect this year to be the same. So we would expect to see some reward for just business delivery to the market expectation. But I think the other piece is that there seems to be a general market feeling that India itself is a difficult place. And I think it would be dishonest to suggest that there aren't some historic problems with shareholders invested in Indian companies where it's not worked out very well. Those things obviously weigh on the market. So for me, I think we've set up Mytrah with two very clear objectives. So one is, first of all, to help people to understand that the Indian market is a very stable and very secure market, and it isn't a high-risk emerging economy in the sense that other people might think it is. You know, India has a rule of law which is very similar to the UK. It has a strong administrative structure, and it works very well. And you know, retroactive change and those kind of things that have happened elsewhere, you haven't and won't happen in India. So India actually is a much more secure environment, I think, than people really give it credit for. And I think the other point is we've tried to make sure that Mytrah is run to the highest international standards that we can. So we have very good governance structures. We build in a lot of checks and balances in the way that we operate, and we can stand the scrutiny of, you know, significant high-profile investors like Capital and Henderson, but also people who've invested into the company recently, like Apollo and Goldman Sachs and Merrill Lynch, who obviously do their due diligence. I mean, we did a deal recently with GE, who invested equity into some of the projects. They also a big international firm. They do their due diligence. So from our point of view, we're differentiating Mytrah in the one part being that we're growing like crazy. We're a utility company which has proven its ability to generate cash. But in addition to that, we've got a very strong governance structure, which makes us, relatively speaking, a safer investment than perhaps some others in India have been in the past.
So Bob, thank you. You have a large list of good, strong, stable names, certainly institutional names involved in the company. So for investors who are interested in your company, if they can check out the ticker, which is MYT, I believe, listed on the London Stock Exchange. But on that note, thank you very much, Bob, for joining us today. It's been a pleasure.
Thanks for your time.